Crypto's going through the same process today, which is you don't really need to know how the protocols work or the bridging works or the composability works anymore. You just need to know, do you trust the institutions that are enabling you to get access to a certain type of collateral?
Hello, everyone. Welcome to the Crypto Playbook. Today, we're going to talk about tokenization. I'm Jeff John Roberts.
And I'm Leo Schwartz.
Leo, that's a word we're hearing a lot. It's a big buzzword these days, but is it really that new? And what exactly is tokenization?
So tokenization has been around for almost as long as crypto. It's basically the idea of taking real-world assets from real estate to dollars and putting them on the blockchain. This has always been a pitch by crypto folks post Bitcoin and Ethereum that you can actually move a lot of the real world into the world of crypto. I think it's never really proven that successful and gotten much traction. We still don't really see real estate on the blockchain, but now it's becoming more and more popular as you see huge financial firms like BlackRock and Fidelity start to tokenize assets from money market funds to even stocks like Apple and Tesla, which I know you're talking with our guest today about.
Yeah, that's correct. And I think that context is important. This isn't a new idea. I remember even, my goodness, 10 years ago, they would talk about, a condo in Aspen or, some security, and you put it on a blockchain. And I think in practice, what it means is someone's holding an asset and then, is the custodian of that. And then you've got a sort of blockchain version of it that can move back and forth. It never caught on 10 years ago, but it seems in the last year or two, it's really taken off. And I think it's helped by big players are coming in, like I think even BlackRock's dabbling in it and stuff like this. But I guess the question is sort of why? Why do we want to do this and why is it taking off now?
I mean, this is always the question with crypto, right? Is there an actual utility or a reason it's happening besides either a marketing stunt or a way for a small group of people to make a lot of money? I think in this case, the argument for tokenization is it allows for trading to happen faster because these assets aren't being managed by intermediaries now that they're just being seamlessly ported from one party to another on the blockchain. The other is it opens up access. So if you're someone in a country like Colombia who might not be able to have access to Tesla shares being traded in the US, now you can actually go onto another exchange and be able to buy them. Whether it actually picks up steam among normal consumers or if it's used more as a niche financial instrument by massive trading firms for something like a tokenized money market fund remains to be seen. But you're seeing huge players from Robinhood to Kraken come into the space.
Yeah, I'm glad you brought up Kraken because Arjun Sethi, the CEO of Kraken, is going to be speaking to me, I should say, about what exactly Kraken is up to, putting stocks on the blockchain, which is a big step. And I mean, I think that points to, if you're just doing it for a marketing stunt, I don't know if you kind of go that full bore and, put 100 or 300 equities onto a blockchain. That's presumably a big lift. There's got to be some sort of demand there too. One final point, though, before we turn to Arjun is that in terms of this getting traction, I think I do need to do a shout out to a guy named Robert Leshner, who founded a protocol called Compound, one of the first successful DeFi platforms, who's got a company called Superstate, where they're acquiring, I think, treasury bills and sort of safe assets and getting the Wall Street crowd to sling these back and forth. Again, I got the feeling we're at a bit of a tipping point. I think this is happening for real. The other thing, too, I think you gave the advantages to putting it on blockchain. Another one is it's 24/7. You can trade it anytime you want. And then also just for financialization, to be able to lend, borrow, and the whole rest of it. Once this kind of stack comes together, then I think this will, kind of be the way things are done. At least that's what they're claiming. But then again, I think you make the point that, people have talked about this for a decade. It could be, a few more big bumps in the road, or who knows, maybe this time in 2 years, we'll all be, trading our stocks on a blockchain. What do you think?
Yeah, and I do think there's a big difference between a super state-like company, which is taking very sophisticated financial instruments that are used by hedge funds for collateral, and they want to be able to have it operate on a blockchain for other types of trading they're doing. I think this is too nuanced a point to really go into here, but this is for very sophisticated investors versus what Kraken or Robinhood is doing, taking a stock like Apple or Tesla, putting it on a blockchain and offering it to retail investors. And I think an interesting question for this episode is, can this actually break through to the mainstream? Does it really offer some sort of new innovation that's not currently available on Schwab or Fidelity?
Yeah, you're right. It's a perennial question. Is this like crypto for the sake of crypto, people trying to make a buck, or is it actually this profound new technology that's going to help us all? On that note, I guess we'll leave it to Arjun to fill in the gaps on what tokenization is all about. I will be speaking to him from Fortune's Brainstorm Tech in lovely Park City, Utah. Welcome, Arjun. Thank you for joining us this very special edition here in Park City, Utah at Fortune Brainstorm Tech for the latest edition of Crypto Playbook.
Yeah, thanks for having me.
Great. We're here today to talk about tokenization and what that means, blockchains, and the future of that. But first, let's just step back for a sec. Tell us a little bit about your role, your background. Kraken, I should say, is I've always thought of as like kind of the crypto person's crypto platform. It's for the OGs, and you came on as a CEO. So how did that come about, and what did you do before then?
So before being named co-CEO, I was an independent board member. An investor in Kraken. I had met Jesse and Ton, a couple times in the past, but over the past 15 years, it was really around the ethos of privacy. It was around the ethos of financial services, crypto for all. If you go to the Kraken blog, we have something called the culture document, and it actually kind of spells out how we think about freedom, autonomy, sovereignty. And I think it just kind of ballooned from there in terms of like what our relationship looked like. And my thesis and the way in which I built out my companies and my firm were very much aligned with that. Actually, on our website, on like Tribe Capital's website, we talk about like Bill of Rights. And then right underneath that, we talk about the Bitcoin white paper, and we talk about this and like the parallels between the two. And so I think like the convergence of those philosophical perspectives, product perspectives is what kind of brought me to Kraken.
Yeah, and I promise to get to tokenization soon too, but Tribe Capital's, it's sort of a noted Silicon Valley venture firm, correct? And you also have a bit of a background in gaming yourself, right?
That's right, yeah. I was in social gaming, social networking, mobile gaming, data and infrastructure, what I call the early wave of, data 1.0 to 2.0, where like things were actually coming online and you store it somewhere, and then you had a fast feedback loop in terms of how to build better products. That was my background, where I came from.
Gotcha. And I know recently, Kraken's been on the forefront of a lot of, technologies in crypto. And recently, your company began offering tokenized equities. So we'll get into that, sort of the stocks on a blockchain. But let's step back for a sec. And the word tokenization gets thrown around a lot, and it's not new. I mean, I remember covering, crypto in like 2014, and it's like, we're going to tokenize this like condo in Aspen and put it on the blockchain. But it's never really come to fruition, but lately it seems perhaps it is. But when someone says tokenization, explain that in a way that like my mom would understand.
Yeah. So I think without going into the technical jargon of it, the one thing that really matters is that you take any asset or any collateral, and you're tokenizing that. That could be a security, it could be a bond, it could be, a meme coin, whatever it might be. And you're wrapping it in a token that is verifiable, who owns it, where it's gone, and a system of ownership that's like digitally sort of locked into a record. And so we call that the permissionless systems, the composability. We talk about blockchain. You take all those pieces out, it's more about like you have the single source of a system of record. Depending on which technology you use, which chain you use, to be able to verify that like something exists. And so when we talk about tokenization, it's like, okay, well, what are the types of assets that we can actually tokenize? The first have been the easiest, which is like, okay, digital native commodities assets, which is what we think about with like, Bitcoin, Ethereum, and so on and so forth. But a lot of people have been talking about, okay, well, how do you tokenize a real world asset or a real world use case asset?
And sorry to interrupt you, but like Bitcoin and Ethereum, they're, always tokenized. If you have a Bitcoin, it's by nature tokenized, right? There's nothing to tokenize. It is a token already.
Well,
right?
I mean, you are still creating a tokenized asset. Like one Bitcoin, right, is a tokenized asset, and obviously it can be fragmented. But the whole point is that you're tokenizing an asset, and then you're able to record that, and then it's verifiable. It's 24/7. It's like instant settlement in a way in which you don't have that with traditional assets, right? There's private contracts, there's public contracts, there's contracts in between, there's different waterfall systems. So ideally you can program that into a smart contract on a token.
Okay. And sorry to stick with the basics, but walk me through in a really slow way. I know some, treasury bills, there are companies, tokenizing treasury bills. A guy named Robert Leshner started Compound, and his new thing is all about that. And right now, trading treasury bills are very liquid. It's easy to trade them. I don't want to get to why we're going to do this in a sec, but first off, okay, suppose I've got, $1,000 treasury bill.
how do we, what's the process by which that is tokenized, both to ensure that I don't go and go give the actual bearer instrument to someone else while it's also on the blockchain? Where does the actual original asset reside, and who is in charge of minting it, so that we can then, because once it's on the blockchain, we can send it around, trace it, all the good things about a blockchain. But sir, tell me those first few steps. I show up at your door with this paper, certificate of a T-bill in my hand. What happens next?
So I think a better way to think about it is, when you go get a T-bill today, I'll ask you the question, who do you go to?
Maybe Fidelity.
Okay. And then, so what did they do in order to be able to facilitate that you have an actual T-bill?
Fair enough. I don't know.
So I think a way to think about it is there's different contracts or securities or, again, ETFs or money market savings accounts where they give you the exact same product, the underlying yield. But the people that are actually getting the treasuries or trading it or going, on the Friday auctions and buying something are different intermediaries in between. What tokenization does, ideally, if you do it right, is that you're getting rid of a lot of the intermediaries to be able to say, hey, I'm getting to the raw underlying asset, and then I'm wrapping that, however it may be wrapped technologically, and I'm giving that as the collateral or the asset or the custody of what we do today with real world assets to the underlying individual that is holding the token. And then you can do more and more with that token. So there is a worldview that the token itself has to be the underlying structure. And that is the most pure form of the collateral that matters. And then there's the other view, which is you need some sort of intermediary to guarantee a level of trust. And that might be a bank or, sovereign government, et cetera. So you take that and you basically say, okay, great. Now I have the ability to take that token. What am I allowed to be able to do with that? Again, I go back to the basics as collateral. If you have that collateral, can you trade it? Can you get access to it? Can you lend against it? Can you deposit it somewhere else? Can you move it? Once you have that across all of these assets, then what you're able to do is just to be able to defragment what you have in traditional financial markets. And I think that's the piece that people lose is we talk about decentralized finance. Decentralized finance is actually about decentralizing aspects of what a traditional bank does or a lender does, and it goes through all these intermediaries. But it's about unifying the systems of what we call unicollateral systems or token systems, so that they can actually bridge to each other.
Yeah, and the blockchains, I think they're great because they're transparent and immutable, and you can't tamper with them. I think when it's up and running there, that's probably a superior way.
Yeah.
But just last question on the basics.
Well, on that point, not to interrupt, I think what's important is that there's the infrastructure. It's kind of like when you think about the web, you don't think about the 404, you don't think about TCP/IP anymore, you don't think about HTTP, you don't think about any of these protocol systems that we've used in order to be able to get to an outcome. You just think about the experience, and then what are the applications of the companies that are delivering that experience. Crypto's going through the same process today, which is you don't really need to know how the protocols work or the bridging works or the composability works anymore. You just need to know, do you trust the institutions that are enabling you to get access to a certain type of collateral? And then what can you do with that collateral? Do you want to store it? Do you want to save it? Do you want to send it? Do you want to lend against it? Do you want to be able to have access to yields that you weren't able to get before because the bank takes it, securities lending, someone else takes it? There's all of these folks that took a piece of the pie along the way. And DeFi, if you just think about the basics of it, or even the Bitcoin white paper, was that how do you put the control back into your hands? And then what are all the products and services that give you back your decision with that control in order to decide what you want to do with that collateral? No one can take it, rehypothecate it, and leverage 1 to 9 or 1 to 20. It's your capital, it's your asset, it's your sovereign right in some cases.
I get that, yeah, and I do think it's promising, and all probably cheaper, more efficient, and more secure if done right. But let's step back a sec though too. What is the role for this all to work? There's got to be trust, and crypto, has had a trust problem, shockingly. But for the good actors, I think it's helpful to assure people who is the custodian? Because when I go buy my T-bill from Fidelity, I presume they have a unit that's, custodian. There's laws they're subject to that they can't be, doing stuff with my T-bill on the side. So with the tokenization process, I guess including, Kraken or some of the other newer people doing it, who is holding the underlying asset, and how do we know it's secure and no one's, doing something funny with it or outright stealing it.
Yeah. So what's great is that the industry has evolved pretty quickly, right? And banking laws apply to how you hold and custody, treasury bills in some cases with what you've seen with the stable coins. Tokenized equities is actually no different, which is where do the underlying shares lie, who has it, who's custodying it. And so that's just more of a disclosure issue, which is like, who's the broker dealer, who might be the clearinghouse, where's the assets custodied, and like, what do you do with that? That can be done extremely efficiently and vertically integrated in some cases. And then what you're doing is you're taking all of that and saying, okay, great, now I've wrapped it and I'm giving you access to the asset and the dividends and maybe in some cases the governance, depending on how the industry evolves. What you're doing is by tokenizing it, you're actually just giving more of the ownership back to the customer. I wouldn't necessarily make the argument that it's always more efficient. Like a closed loop walled garden can be more efficient in the way in which it's interacting with the customers. But however, they are already finding out ways in which to keep it walled, to be able to keep as much economics as possible, because again, there's so many intermediaries around the way that are taking a certain amount of spread. The whole point of tokenizing anything or putting anything on the blockchain or putting anything in crypto is to reduce all that friction, remove the intermediaries, and then allow the individuals to be able to take control of how they want to manage their assets. I always go back to the underlying, just like the simplification of it, which is what do you want to do with your own assets, and then who do you trust? A, you should trust yourself first. Then B, what are the centralized systems that you want to trust or the established systems? And then what are the products and services that you may want to go into what I call deep sea exploration?
Yeah. And once again, sort of harping this, but who is the custodian when we tokenize a share of Apple stock or a T-bill? And I guess Kraken's actually doing this. So who's your custodian?
Yeah. So for X stocks, we work with within the laws that are based in the United States, will be a custodian in the United States that everyone works with. It could be Fidelity. It could be Citibank. In Europe, they have their own sort of custodian banks. We work with the same custodian banks that people have worked with for the last, 25, 50, or 100 years in some cases. So that doesn't really change. Just that now we become the broker dealer or we become the clearinghouse. Like we vertically integrated so that we can facilitate, instant settlements.
And you mentioned X stocks. That's the new tokenized shares that are now available on Kraken. Can you tell us a little more about that?
So so there are two ways to sort of look at this. One is that we wanted to build, again, true and native to crypto, which is we wanted to have decentralized access. So non-custodial as well as custodial access to X stocks. X stocks is the token, and then the token represents the underlying shares that might be there for each company. So Tesla or S&P 500, ETFs, et cetera, just down the line. And so we started off with a set of assets, but I think what was more important was that it's not just available on Kraken. It's also available on other centralized exchanges. It's also available on other decentralized exchanges. So it's available for anyone in the world to be able to use, assuming that any of the DEXs or the centralized exchanges adopt it. And then we just provide the infrastructure to be able to enable it. So we help with the liquidity, we help with the custody, we help with the movement, so on and so forth.
And how exactly did you stand that up? Did Kraken have to go out and buy a bunch of shares, like a bunch of every share on the S&P 500, or do you rely on a market maker, or just for what's under the hood of that, and how does that work?
Yeah, exactly? So all of the shares are backed one-to-one. So we do acquire them. We have a set of partners that we work with in order to facilitate it, the same way you would work with any partners if you wanted to, have a fintech app that offers securities. It's just that we're providing and working with another set of partners that are able to sort of mint and redeem the tokens based on what the supply and demand looks like. And then you work with market makers on the crypto side that are more native there, that are able to sort of help stabilize and make sure that, again, the price is one-to-one and the spread is as tight as possible.
That makes sense. So if I turn up on Kraken's X stocks and it's like I want to buy, 10 shares of Tesla, or maybe let's pick a more obscure stock. Let's say it's something that's, less famous, that you're not likely to have on hand. You'll go out to market maker, acquire it on my behalf, wrap it in a token wrapper, and then deliver it to my wallet.
It's not based on your demand yet. It's based on what we think we can facilitate first. So today we have a little bit above 50. Soon we'll have 100. Soon we'll have 1,000. It's more about like, what is the liquidity that you can provide on our platform? We're a centralized exchange, so we do have a lot of liquidity. We have the ability to sort of move in a direction where we can support these type of new assets. It's just like any other token listing. And then we've got a set of partners on different chains that are also doing the same thing. And so we kind of partner one by one to make sure that we can facilitate it. But if there's like demand for a certain asset, then we'll start looking into it depending on where that might be coming from. I think one thing that's really cool is that, yes, it sits on Kraken, but it also sits on these other platforms, right? Like you can see it in the international markets. Like there's in South Africa, they don't have, you have to work through a broker dealer. It's hard to get access to US, tokenized assets, but US assets in the first place. We enable it for them. And then within one day, it became 50 to 60% of their volume, which is like, it was that much demand for McDonald's stock or Tesla stock or S&P 500. So you've got a lot of demand for those assets, but the traditional way of doing it is, again, brick and mortar, ton of intermediaries, and it just takes too much time and too many people in the middle making money. So by the time you get to the underlying stock, it's just too expensive. And what we're doing is we're just reducing all of that. And our goal is to continue to reduce that. The last piece, which might be a little bit more technical, is if you think about securities lending, all of the intermediaries make money along the way because they hold the asset. And so they're lending it out to other folks that want access to either an abundance of those securities or a scarcity of those securities, and then they charge for it. Our whole goal is that, again, if you are the holder of the token, and even if we are custodying it on your behalf, like those economics should flow back to you eventually, not the other way around.
But if I go to X stocks tomorrow, I want to buy some shares, will the price be about comparable? Or what's, I don't know, say I buy a stock for $100 at my Schwab or Robinhood account. How much will it cost? Presumably close, but is it slightly more, slightly less, or exactly the same?
It's pretty close depending on where you are. So I think of it as we've just started and nothing is perfect. We just keep getting better and better on a daily basis. In the US, it's close. The spreads are very, very small versus what you would do on any other broker dealer. But the way I liken it is like, okay, on average, what does it look like to buy in Argentina? What does it look like to buy in Indonesia? What does it look like to buy in anywhere else in the world? And for them, they are going to get charged 5, 10, or 15%, which is crazy. But by the way, like that's how much it used to cost in the United States 15 years ago. And so of course those spreads have gone down with different infrastructure. So we'll just keep getting better and better. Like I think 100 basis points is too high, but like that's kind of what you see right now when there's not enough liquidity. As more liquidity comes in, it gets to 1 to 2 basis points, and you can sort of think about it in that direction. So that's kind of the goal, which is as de minimis as possible.
And how broadly traded are these? Because with Bitcoin, obviously, you might be sitting in Mongolia, and I might be sitting in Timbuktu, and that's BD Bitcoin. With assets like this, is there sure regulatory constraints that would prevent you in Mongolia, me in Timbuktu, from slinging I don't know, Tesla and Apple stock back and forth?
So in the US, there's obviously securities laws and what you can provide to customers in the US. And so we're working through that with the SEC and CFTC. In Europe, we're approved to be able to offer this to any European. We're MiCA compliant. And so that actually rolled out starting last week, and we're just making sure it works for all the customers. Europe, I would actually liken not too dissimilar to a lot of the rest of the world markets like Latin America, Asia, where the infrastructure hasn't caught up to make sure that the cost is as low as possible for someone to buy any equities, European, US, or China or India. And so rest of the world, it doesn't have anything. And so what we've been able to do is get most of the world online as quickly as possible outside certain jurisdictions outside the United States. And our hope is that between now and the end of the year or beginning of next year, we can get US online at the same time. Now, when this happens, again, I go back to, you've got a unified collateral system where you can start building way more products on top of that, similar to what you've seen with stablecoins. Right? Like if you take a look at, I don't think it's a debate anymore that stablecoins is very useful for people to hedge against their own currency, to be able to save and store, to be able to send and receive, to be able to build their businesses up and running no matter where they are in the world. And within my own tribe portfolio, we see that across Mexico, Peru, Colombia, Argentina, et cetera. And so when you think about what you can do with tokenized equities as collateral on behalf of these people, where they're not starting to think about just where do I put my USD stablecoins, but now I want to start thinking about storing and saving different types of yields that might be like an ETF, where I want a Tesla stock or a McDonald's stock, being able to participate in actual products that grow and products that are safe or products that are stable, which are essentially like the US equities market, and proliferating that out. I think that actually becomes much more exciting because access becomes much more evenly distributed.
2 final questions. I've seen this stuff before, earlier iterations to get pitches like, this condo in Aspen's on the blockchain.
That's right.
And it just didn't work in the past. And also, for years I get this thing, Bank of America and Credit Suisse tokenized the stock. And it's like, it was more proof of concept,
Sure.
but it never really, made the jump into mainstream trading. Is something different now?
There's two things. One is, remember, there are certain assets that are more naturally inclined to trade. So we'll kind of start there. And then we'll move all the way back to what you mentioned, which is like, how do I get my house on the blockchain? Those are two different things. There's a lot of assets like that painting that's behind us right now where the pricing and benchmark happens really slowly. And you don't have this like large benchmarking system to be able to understand what that price discovery may be. Anything that's public markets versus private markets, we all know pricing and benchmarking happens because of frequency of transactions. You can do more and more of that over time because of global liquidity and crypto. Now, but I think it's really important. You want to go into the most natural assets possible that already trade. So what is that? Bonds, corporate treasuries, obviously FX trading and currencies, obviously equities. So those are the most, what I'd say, natural progression to move in that direction. I'm pretty sure insurance is going to start trading that same way. Mortgage-backed securities, which is what we've been used to for a long time, will also continue to trade that way. And so more and more of assets that can be traded is what you'll see. I think the days of, art or a house, I think it's a cool concept, and I do think it will come online at some point. But defining that as collateral to be able to access liquidity is different than saying I want it to be tradable every single day with liquidity. And that's it's a different type of concept that I think people kind of forget about.
Okay. And finally, so it sounds like you stood this up about a month ago. Is that right?
We launched Xtalks, I think roughly about 2.5, 3 months ago.
Gotcha. Okay. And how's it going so far? And if some of our listeners out there want to actually, I find it's useful to actually try something and see it firsthand. So how's it going? And if someone wants to try this, what do they do?
So if you are already participating in DeFi, it's like easy to test this and see how it's working, right? Like we're already up and running with Solana, a lot of decentralized exchanges. We just launched Ethereum last week, and we're getting up on a bunch of decentralized exchanges there as well. But like you can get it outside the United States. You can use it on Kraken today, all over the world. We're allowed for it, and then we have more and more partners that other centralized exchanges that have also launched it. And you'll see, and I think you'll just continue to see that more and more. As I mentioned before, places like South Africa, Latin America, if you're already there, and there are apps that are offering tokenized equities, more likely than not, they're offering our infrastructure. And again, I think that's a key point here is that we are offering infrastructure to anyone, not saying that it has to be within our closed walled garden. Whereas everyone that's done it before, you were asked, like, I've heard it before, those were not the underlying assets that were being tokenized. They were like synthetics, or they were a future of it, or an options-based system to say like, okay, I'm going to be trading off of something that could exist. But they don't hold a raw underlying asset. The whole point here is that if you have the underlying asset and then you tokenize it, then you're reducing the friction for the underlying customer.
Yeah, no, fascinating. But for practical purposes, for a newbie, like they want us like, check this out. Would you just go to like kraken.com, or would you get a Kraken? I should know this, but does Kraken have its own wallet, or?
We do have our own wallet. You can go to kraken.com, and this is, again, available outside the United States today.
Okay, and when will it be available in the US?
I think, again, we're going to continue to work with the SEC and the CFTC around what this looks like, because there are aspects of securities laws, and then there's aspects of what you traditionally see in the markets, and aspects of like how this gets traded. And so my hope is that we get to a place where we start offering this to US customers sometime next year.
Yeah, and I think just the future is so intriguing. Like I like the idea of having some of my stocks tokenized, and I can use that sort of collateral as my own and go out there and shop DeFi platforms to get loans or do what I like or seek yield, and it just feels like that era it was for a long time very far away, but it feels like maybe all this is kind of going to be literally here in the next year or two.
I think the key point is fragmentation. Forget equities for a second. Just think about any of your assets that are sitting tokenized or on the blockchain or any chain. That the ability to freely move your assets back and forth, however you decide you want to move them, is really important. So if you feel like I want to have just treasury yields, great. And if you feel different a week later because you read some Fed report or an earnings report, or the way in which the government is interacting to see, I actually want to move into something that's risky, non-risky versus lending, like you've got full access. And I think one thing that people forget about is we say these things and sometimes I feel it's actually quite complicated, is just think about all of the products that rich people get because they've got millions of dollars in their bank account from like a wealth manager. And all of those products are not evenly distributed. So if you've got $5,000 or $50,000 or even $100,000 in your bank account, you don't get access to most of these products. Imagine now, because it's off of one collateral system, you get access now. It's much, much more evenly distributed. And because the distribution gets larger to be able to get access to that, you're much safer in participating in these programs than you were before.
Yeah, well, that's so intriguing. And Arjun, thank you for breaking it down so helpfully and for coming on our show. And forward to talking before too long.
Great. Thanks for having me.
Thank you, Arjun.
So Jeff, how was Park City?
It's lovely. Highly recommend it.
And you got to speak with Arjun, who's one of the more interesting figures in crypto. I mean, he was at Tribe Capital before. I think he still is, and obviously now taking a very key role in his CEO role at Kraken.
Yeah, an intense guy. Arjun is, very intelligent, very driven. And I thought he made the case for tokenization well, too. That's the other thing about Arjun. He's no fool. He does not do these sort of things lightly. He convinced me this is where the world's going. What I'm more curious about is the timeline again, too. I think for this to work is, I think the average stock owner or trader is going to not really have to know or care. There's a blockchain there and it's going to work in the background. Of course, they've been saying this for a decade too. So I'll be curious if this all comes to pass in a year or 5 years.
So you're going to start buying Apple stock on Kraken on the blockchain?
Well, I mean, I gotta be honest, I don't care what it's on. I want the best price for the Apple stock. And, Arjun also sort of suggested that maybe this is, a cheaper way to get it. Maybe there'll be a little bit of a better spread or something, but we'll see.
Yeah. Well, I think if you're buying 2 or 3 shares, that few cents difference in spread probably doesn't make much of a difference. But maybe if you're operating at a huge scale, or
maybe it's time for us to go into trading. Maybe, we can go become day traders if this podcasting thing doesn't work out. Well, thanks everyone for joining us. I'm Jeff John Roberts.
And I'm Leo Schwartz. See you next time. This was the Crypto Playbook, a Fortune magazine podcast. Our producer and editor is Ellen Esteb. Our production manager is Sam Freund. Our executive producer is Lydia Randall. Fortune's head of video is Adam Baneke.